Hey, 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 everybody. It's Thursday, and you know that means that's right. It's another edition of the Real Deal Pod with Allister and Jeff. Yes, it is me, Allister Carrington, your trusted realtor, alongside our mortgage guru and your trusted lender, Jeff Lee. And it is episode number 68. It is a beautiful sunny day outside, boy. Holy cow. And we are in for an incredible next few days. It's gonna be hot again. Jeff, my man, how you doing, buddy?
68 pods. We
68,
are
man.
officially in our golden era as
Right?
far
We are
as
now senior
pods.
citizens of the podcast community.
Yeah. Yeah.
Beautiful.
I think it's always really cool. And I was actually talking to several of my friends about the pod. Because 68, if you think about it, Elser, that's quite a bit of energy, quite a bit of
Yeah.
work. And if you think about that, most people who start pods, they don't get through seven. Like seven
Yeah.
is that number where they just collapse, right?
Yeah.
In
Yeah.
fact, I think if you do, I want to say seven pods, but I'm thinking 12, you are in the top 1% in the world.
Yeah, it's 12 or 15. Yeah, 12 or 15 is that number. Yeah.
So, you know what? Air clap to
Air clap to
us.
us, baby. And it's true. And the great thing too is because I of course monitor this, we get consistent new listeners and all that sort of stuff. So shout out to our current listeners. Thank you so much for continuing to love, like us, share us, and tell everybody about us because we are gathering new listeners every single pod. So it's a beautiful thing to see.
Yeah, and a big shout out to my biggest fan, Christina Joe. I know you're listening.
Yeah, baby. Thank you. Thank you. Oh, and to me, it's and for us, one of our biggest fans on my end is Victoria Duffield, an amazing realtor with Remax True Peak. She's a great gal. So shout out to you, Victoria.
Yeah, 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 yeah. Fireworks, fireworks, fireworks.
Right, right. So my man, how you doing?
I'm good. Just getting back into the grind. It's busy. It's active. It's good. Getting ready to head off to Italy. So there might be a pause
Ooh.
in our pods, or we might be doing it from Florence or the Amalfi Coast. That's to be decided on.
Oh, Amalfi
Um,
Coast, baby, it's beautiful.
yeah, so that's about that's yeah, less than 3 weeks away. So
I just want to say I missed my invitation. I haven't gone and checked the mail yet, so it must be sitting
you
in
did
there.
get invited. You did get
Oh,
invited, but
oh,
we never had a response, so we had to expire the invitation.
probably because it's still sitting in my mailbox.
Probably.
My
Yeah.
bad.
Yeah.
My bad.
There's next year.
That's awesome, man. That's awesome. Anything specific you're looking forward to going to do out there, or just enjoying
You
to
know
go out
what?
there and explore?
I jokingly always say that I am the best wingman for most things because I'm a big yes for everything. But
Yeah,
if you ask me the details, I tell me how much,
right.
tell me what I need to bring, where I need to be, and that's really all I need to know.
Buddy, we would be the perfect traveling companions, except you and I would then get nothing done because I'm the exact same way. Just I'm like, okay, tell me how much it costs and tell me what I need to bring, and then I don't care. I don't want to be in charge of any of the. I don't want to be the Danny Tanner with the itinerary au fun. That's why we joke around. The kids and I, we call my wife Michelle. We call her Michelle Tanner and her itinerary or au fun because she's always the one that's got all the plans down. We got to be here at this time, doing this at
Yeah.
that time, right?
Yeah. Mad respect for for people that do that.
Yeah.
And that some actually really enjoy it. I am not one of
Mhm.
those.
Mhm.
And well, maybe I say that, but loosely. But yeah, no, mad respect and hats off for all you planners out there because
Yeah.
it can be a very thankless job as well.
Oh, you betcha. You betcha. That's why we thank her all the time. Otherwise, we'd get beat too. So it's twofold. It's nice to do, and then it saves beating. So that's always good.
Well, or poisoning in your suppers, right? So
Yeah, right. That's right. That's right. Yeah, man. For me, yeah, it's been busy too. I was actually, and I know we were talking about this offline, but I wanted to kind of bring this up a little bit. It's going to be the did you
Did
know?
you
But
know?
I was doing a deficiency walkthrough with my client yesterday on a pre-sale that he purchased, and it's going to complete the end of September. And it was funny. So we're going through the deficiency walkthrough, and it went well. So let's just preface it by saying it went amazing. And shout out to the lady that we walked through at the Jacob. She was absolutely awesome. And so the majority of the things of deficiencies were just little, nicks and ticks and stuff that, God bless trades, right? We love them. They do the job in building our product, but they want to get through things fast. So not all the times do they paint everything. They'll paint the stuff you can see, not the stuff that you can't, right? So of course I'm going through the deficiency walkthrough and I'm labeling stuff that's not done painted and all that sort of stuff. And my client Bobby, he looks at me and he goes, Allister, I am so thankful that you came along because there is so many stuff that I would have missed. And then he admittedly said too, and he goes, and I'm not that picky. So I probably would have let it go. And I'm like, dude, it's not about being picky. It's just about making sure that it's done right. And I said, this isn't bad because, like all we're doing is picking up little deficiencies, like you said, that you might have felt isn't a big deal. And he goes, oh my God, good, because I thought I was being a real dick right now because we had so many things tagged, right? And even the lady turned around and then said to him, no, you're not. She's like, this has actually been really good. This isn't that bad. And she goes, and it's true. You want to make sure that when you receive your property, that it's the way you expected it to look and the way you want it to look. So it kind of harkened back to when we went to the pre-sale in the first place, and I took them to the pre-sale. And I always remember talking with, at the beginning of my career, to people that would approach me about pre-sales, and they'd say, well, I can just go to the showroom myself and buy it on my own. And I'd tell them, no, you could, right? But it's not the greatest idea because the sales associates there, and let's keep in mind, right? For the most part, they're sales associates. They're not actually realtors. So they don't even have a license, right? They are hired by the developer to stick the paper in the contract in front of your face, read it out, and then have you sign it. They can't give you any advice, right? Nor do they want to because they're getting paid by the developer, right? So they're not there for your best interest. And so I always say, it's super, super important to have representation, whatever you're buying, whether it be resale, as we always call it, buying something that was already purchased before and being sold again, that's resale, or when you're going into a pre-sale and visiting the showroom. It's super important to have representation go along with you. We're not there to make a buck, right? Well, we shouldn't be. I'll let me preface that. We shouldn't be there to make a buck. Do we get paid commission on it? Yes. That's the other reason why they don't want you bringing in a realtor alongside with you, because the developer doesn't want to pay commissions out to the realtor. Right. That's the main reason they don't want you to come in. And the second reason they don't want you to come in is because we're going to read through those contracts more so than than the individual is going to read through the contract, and we're going to have a better understanding of that contract than again will be an individual that's never bought or maybe purchased one or two pre-sales in their life, because a lot of those contracts, they change from developer to developer. One might say this and the other might say, oh, I think it's better if we put this in there, and it may affect you differently. And I was telling my client about a pre-sale that I did. This one was 2 years ago. Yeah, 2 years ago now, I believe it was. And when we were doing the deficiency walkthrough, we were just walking around, and I'm looking around and I'm like, there's something major missing in here. And I turned around and I looked at the lady that was doing our walkthrough and I said, "Where's the fireplace?" And she turned around and all flustered, looked at us and said, your unit doesn't come with a fireplace." I'm like, "I beg your pardon. Yes, it does. I was here when we signed the documents. I was here when we added that on. Where is it?" And of course, now she's even more flustered, going through her paperwork, and lo and behold, there's the fireplace. There's the note that the fireplace was an added accessory. And now she's like, "Oh my goodness, well, we're gonna have to check back with you." Week and a half, 2 weeks later, they're telling me, "You know what? We're just gonna give your client the cost of what that fireplace would have been, 3,500, 4 grand." And I said, "The hell you are." This unit comes with a fireplace. 4 grand isn't going to help her later on in the resale value, because that's going to add resale. That adds to her resale value. That this lady is getting her fireplace. "Well, no, no, no. Let me talk to your client." I said, "Fine, you can talk to my client." I quickly called my client and said, "They're going to call you." And I said, "Under no circumstances do you agree to taking this money." So they call her, of course, and she says, "No, I'm not taking the money. I want my fireplace installed." And then they tried to turn around and say, "Well, look, we just can't do it." And I said, "The hell you're not. In this contract, it states that a fireplace will be installed. There was no verbiage that gave them an out on anything that they missed, right? Because I tell you, if their verbiage was in there, I would have had them strike it out, right? Because the hell that's going to happen." And that's what another thing people need to understand is, just because they put that contract in front of you does not mean you have to agree to all of those terms. It's just like a contract when you're writing on a property that's on a resale property. It's up to the developer to agree that to have that struck out. The developer doesn't have to agree to that either, but you don't have to agree to their verbiage as well, right? So that's where I say it is so important that it is so extremely important that when you go and visit a showroom, as if you're not buying it, if you're not committed to purchasing that day, then great. Go and visit, go see what it has to look like, go take a look at the color schemes and all of that sort of stuff. But if you are going to sit down and put your name on a piece of paper and sign it, please make sure that you have representation um, on your side for yourself, because it doesn't just help when you're signing it. It also helps in the deficiency walkthrough. That's another thing that they actually don't want. They don't really want the realtor coming with you. That's why they normally state now that only 2 people can come to the walkthrough. And if your realtor is coming with you, that means that realtor acts as one person, right? Because normally somebody wants to bring along somebody, their wife or their friend or something, to show off what they bought. So the discourage having a realtor come with them. They say that realtor acts as that one person. So now only you and your realtor can come, right?
Yeah.
So just a little bit of a did you know for people out there, right? I wanted to make it a happier did you know, right? And this is a happy one. It's education, but just make sure you have representation when we're going out there when you're going out there in the pre-sale world, everybody.
Yeah. I would also add, like when you are completing, actually get a home inspection as well.
Yes, 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 that too. Yes, yes, yes. That's a great point. That's a great point. Yeah,
So to sum it up, when you are purchasing a pre-sale, get a realtor.
right.
When you're completing on a pre-sale, have it home inspected.
Yep.
And no matter under any circumstance, and I've seen and heard this lots, when you're going in to purchase a pre-sale, you don't need representation, realtor. We can do this all for you. I am going to tell you folks, if you hear that,
Run away.
Run away and go get a realtor to represent you in the purchase of the pre-sale. It is going to save you headaches and
Yep.
it's going to save you a lot of energy.
And I will tell you that that the good developers actually will encourage you to bring along a realtor and work very well with realtors as well. The solid developers really do. So yeah, so great thing to do, everybody. Have representation in everything you do.
Yep.
That's my did you know, Jeff. It was going to be on Castlegar, but we did it on having representation in the pre-sale anyways. But just so you guys know, Castlegar, for anybody that's been there, I have not, is being called one of the top spots on what's being called the European road trip in Canada. And it's actually highlighting spots throughout Canada that are just like European cities. And Castlegar, which I didn't know. Well, I knew there is a place in Ireland called Castlegar, but that is where Castlegar is named after, and takes on a lot of the characteristics of that Irish city. So there's some time in the summer left, go check out Castlegar. Reading it made me want to go.
There we
Jeff, have you
go.
been to Castlegar?
Like you asked me that. If I have been, I don't remember, but I actually find that very interesting. You'll have to send me that link or put it in here somewhere. Um, because yeah, like BC, European cities, I'd be all over that.
Yeah, amazing trails and stuff like that. It's awesome. You're on mute.
Yeah, so how are you doing? My dog is going crazy here.
Oh, we couldn't hear him.
Oh no? Okay, well,
No, didn't hear a thing. But hi,
perfect.
Louis. He's upset that he's not going to. He's just upset that he didn't get his invitation to the coast, to the Amalfi Coast either.
He's gonna get rehomed here pretty quick anyway, so we're not gonna have these issues anymore.
So, my man, what do you got for us today?
Yeah, I wanted to talk a little bit about mortgage portability and bridge financing. It always seems that we talk about things that we've experienced in the last week,
Yeah,
and even coming into these pre-sales, there may be people that want to port their mortgage or understand what that means, or they want a bridge financing, which a lot of people don't really quite understand.
that's the big one. They don't get what bridge financing means. I think they're always just like, "Oh, I'm just going to bridge finance."
Yeah.
Yeah,
So what I want to do is just spend a little time about explaining what mortgage portability is, explaining what bridge financing is, making sure that people understand the difference, understand the cons of it, and just to kind of lift that fog, because like you said, I'm not going to say on the daily, but I'm going to say on the bi-weekly, we are always having conversations with people saying, "Oh, you know what? I put my house on the market. I'm going to
yeah.
go buy something and I'm just going to need some bridge financing because my house hasn't sold yet. So I'm just going to do some bridge financing and go do my purchase." And I'm like, well, you know what? Let's talk about what bridge financing is and really get a good understanding of what bridge financing is. But before that, let's talk about mortgage portability
Let's do it.
because a lot of times people own a home,
Yep.
they're selling that home, they're buying a new home, and they want to port the mortgage. Some people will say, "I want a bridge," but actually, what they're wanting to do is port their mortgage, right?
Yeah.
So, what does portability mean or mortgage portability mean? It really simply means you're taking your existing mortgage, you're putting it into a box, and you're moving it to your new home.
There you go.
No penalties, there's no costs. But the thing is that what you have to understand is that you also have to re-qualify, right?
Yeah.
A lot of people, when they're porting their mortgage, they have a misunderstanding that they don't have to requalify, that they can just simply port the mortgage to the new property,
That
right?
I think is the biggest thing that they don't realize is that they have to requalify.
Exactly. The only
Yeah.
time, people, that you don't need to requalify for your mortgage is when you're renewing with the same lender that your mortgage is currently with. That is the only time, as of today, that you don't have to requalify. But that isn't always necessarily true. I was working with a client that was working with a credit union, and he actually was renewing a mortgage. He actually had to requalify because the mortgage uh, type that he was in was no longer a valid product. It was the first time in
Oh,
my years of brokering, in my years in financing, that I've actually heard that somebody had to requalify by simply renewing their mortgage. I actually never even heard of it before. So it
yeah,
does
neither did I.
happen.
Can
It
I
does
ask a quick
happen.
question? How often do mortgages like those things expire? Like how often does that happen?
Well, when you say expire, I'm going to
Not
use the word
expire. I
renew.
don't mean expire, but what I mean is you said his product was no longer available, right? What he was in. That's what I meant. Like how often does that happen?
At the end of the day, banks are always introducing new kind of mortgage products, right?
Right.
But also, in the same respect, those new mortgage products may no longer be available.
Right.
But at the end of the day, it's like, hey, have been here for 5 years in this mortgage product that you no longer carry, but I'm in it. I've been in good standing for 5 years, making payments on time every time. And I'm simply renewing under the same terms and conditions as far as loan amounts, amortizations with the new rate. Why would they need to requalify?
Yeah.
Right? The only time that I've seen people needing to requalify for something is either when they don't have good repayment history, right? Or they're porting the mortgage. And
Right.
that is really the only time that I've had to see people requalify for something that they already have had, and that they have history behind it. So
Right.
so again, when you're renewing your mortgage, I'm going to say 9.9995%, you're never having to requalify, because providing that all the terms and the conditions are remaining the same. If you are porting your mortgage to a new property and either increasing that loan amount or decreasing that loan amount, that is the time where you have to actually requalify for whatever you're trying to do.
Right. Yeah. Yeah.
So yeah, so again, portability, that really is it. Like, what the takeaways here is, if you're porting your mortgage, number one, you need to requalify. You
Yep.
can port your mortgage and borrow more money if you need to and you qualify. You can also port your mortgage and get less money with certain lenders. And you also have to requalify, but also keep in mind that there's also going to be a penalty that's involved. Say, for example, your mortgage is 500,000, you're downsizing, and now you only need 250,000. You will
Yeah.
pay a penalty on that 250,000. That is, you had that $500,000 mortgage. Now you only need 250. So you're no longer needing that other 250 grand. So you're taking it away from your existing mortgage. There will be a penalty implication on that amount that is no longer needed.
Now, quick question, because so when you port, right? Are you keeping and you have to requalify? Are you keeping your same rate, or are you going into a blended rate? Like I know that, because I know that that's typically one of the advantages of when you're porting your mortgage is that you're keeping a good rate with you. Now,
Yeah.
is it the same rate, or are you blending it now?
So again, depends on the lender. There are some lenders that will actually blend the rate.
Okay.
Then there are lenders that will create another segment to the existing mortgage, where that mortgage that you're porting, all the terms and conditions remain the same. Now, say for example, you need another 100,000, that creates a new segment with today's rates and
Right.
whatever amortization that you're choosing to use. So it really all depends on the financial institution that your current mortgage is with, and where you're porting it to. So it can be either or, depending on the financial institution.
Huh. All right. Cool.
Yeah, so the other thing again to keep in mind, and some of the pros of having porting out a mortgage is that you save on penalties. You're not
Yeah.
breaking that mortgage and paying the penalty and starting it all over again. Um, at times you will need to, but if you're porting the mortgage, you're saving on the penalty, right? Unless you're
Yeah.
decreasing the amount of mortgage you're bringing over and not using, the exact amount. You are keeping your good rate, again, depending on the financial institution, and or you're blending the rate, which is still a sharper rate than what
Yep.
you may be getting if you were to break it and refinance. And again, you're working with the same lender, right? Or you're not necessarily working, sorry, you're not working with the same lender. Yes, sorry, I'm getting confused. And you're working with the same lender.
Yeah.
Thus, no penalties, right?
Yeah. Yeah.
So you're working, you have that same relationship, you have that same lender, you're keeping that rate or you're getting a blended rate and you're saving on penalties because you're not breaking that mortgage and going to a new lender. If that was the case, then you would have that penalty implication because you're switching the lender, right? Now, some of the cons of porting a mortgage is that not all mortgages are portable. There are some variable rate mortgages out there, Allister, where you just where the with you don't the financial institution does not allow you to port it. Toronto Dominion is one of those lenders.
Really? I actually did. That's one that I did not know.
And then there's other lenders that will allow you to port a mortgage, say like Scotiabank. But not all mortgages are portable. So depending on the
Hmm.
type of mortgage you're in, um, and depending on the financial institution you're with, will or will not allow you. Now,
Okay.
with fixed mortgages, when we're talking full frill mortgages, the ones that don't limit don't limit with what you can do. Um,
Hmm.
Pretty much, I'm going to say the majority of full frill mortgages are portable. But again, another con is you need to requalify if you port a mortgage, and the timing needs to be there because again, some lenders will allow you to only port a mortgage within 30 days from the sale to the purchase. Some lenders it will be 60 days. Some lenders it will be 90 days.
Hmm.
Some lenders it will be 6 months. And here's again a positive plug for TD. TD will say, hey, um, they'll give you a year. So you'll break the mortgage, you'll pay the penalty. Providing that you bring a mortgage back to them within a year, you're going to get part of that penalty back, right?
Oh, wow.
So again, every lender is a little bit different, but the
Yeah.
timing needs to be accurate because again, some people will say, well, I heard on the pod that I have a year. Well, no, you don't. Other lenders will only give you 30 days, right?
Yeah.
Some lenders might not give you the option at all. So again, you need to know what your porting options are outside of what the only question people ask is, well, what is my rate? The other questions is, well, what are my porting options, right?
Right. Again, why everybody should be listening to this pod so that they know what questions to ask, right?
Yeah, and we've talked about this before about the personalities of a mortgage.
Yeah.
There is more to a mortgage than just what is the rate, right?
Yeah. Yeah.
Well, today, well, what are my porting options? How does it work? Right? We've
Hmm.
talked about prepayment privileges. What are my prepayment privileges and how much can I do? Right?
Yeah. Yeah.
Porting again, like if I want to port my mortgage and borrow more money, can I do that? That's called a port and extend. Can I port my mortgage and not use all the money and I want to decrease my mortgage amount? Can I do that? Again, sometimes the answer is yes, sometimes the answer is no. If I'm in a fixed rate, can I port my mortgage? If I'm in a variable rate, can I port my mortgage? And again, a lot of times the answers on variables, the answer to that is no, right? So again, this is all part of that education process about what are the personalities of the mortgage. And again, porting is one of the personalities, equally as important as rate, right?
I would say so for sure.
So so that's really porting. And then bridge financing.
Yeah, this is the big one. This is the big one.
Bridge financing, folks, is your house is on the market.
Yeah.
You're now in the market to purchase. The only time that you can bridge is when you have a firm and binding sale of your existing property. Yes, it's on the market, but it doesn't qualify you for a bridge. It has to be on the market, or it can even be a private sale, but you have to have a firm and binding sale of your existing property that's completing after your purchase.
Right.
That's when a
So
bridge
that's
finance comes into play.
yeah. And so when we say like firm, I mean like Jeff means like it can't still be going through subject removal, right?
Correct.
Like
Yeah.
it has to be firm. And I think like that's one of the key things. I hear it too when I'm doing listing appointments, or when I'm helping my buyers that have a place, and they say, hey Alistair, I've got a place to sell, so we'll just get that up, and then I'll just go to the bank and I'll get bridge financing, and I'll was like, hey guys, whoa, step back. let's
Yeah.
let's let's step back. I'm not too sure, because of course I can't give mortgage advice, but from what I've been told, this is how it works. Go talk to your lender about it, and if your lender doesn't know about it, I've got somebody, Jeff, to have that discussion with you. But that's like that is one of the biggest things that happens in our world.
Yeah.
Yeah.
And understand too, like I've been in this business for well over a decade, Alistair.
Yeah.
I would say on one hand is how many bridge financing that we've done. It's not a common thing, right?
Yeah.
I actually presented on this because it really is a confusing thing because realtors don't really quite get it either sometimes.
Yeah.
So I present to on this a lot, and I was speaking with another realtor. He was in the business for, I'm going to say, probably 18 years. And he said not once in his life has he had to do a bridge financing with any of his clients. And here's the reason why he said to me is like, look, if people are selling and people are buying, usually the sale is coming, the completion of the sale of the existing property is the day before the completion of the purchase,
Right.
right?
Yep.
He said in all his 18 years, he has never had the experience, and obviously bridge financing is available because it happens,
Hmm.
but it doesn't happen often, right?
Yeah.
Um, in all his 18 years, he has never had someone sell their place, right? It complete after their purchase. And in my doing business for well over a decade, I can probably say that we've done bridge financing a handful of times. So it's not a common thing, and that's why there's a lot of uneducation about it. But at the
Yeah.
end of
I'm
the
8 years. I'm 8 years in, and have not done one. Have not done one myself. And
yeah, because
it's
I
to your
think
point.
once
Sorry.
people understand what bridge financing is and how it works, everything just kind of lines up and figures itself out because it's
Yeah.
not what people believe it to be, right?
Right.
Now, if you could basically get bridge financing, put your house on the market, not sell it and go buy something, bridge financing would, well, which is not bridge financing, that product would be used widely available, right?
Yeah. Yeah.
But understand, like I said, and we'll leave it at this, is in order to do bridge financing, you have to have the firm and binding sale, all subjects removed of your existing property, and your sale is completing after your purchase, right? Understand that it is a short-term loan, typically interest only, and understand that there is a time gap on it as well. It's not that you can have it on forever. So again, when you require bridge financing, number one, not all lenders offer it. Number two, it doesn't cost the same. It's not like a general cost of credit with all lenders. It's different with everybody. And understand that every lender has a certain time limit as far as what they're going to or how long you can have the bridge for, right?
Right.
So to sum it up, the benefits of bridge financing is that you can buy before you sell. It can make stronger offers. It gives you that flexible timing. But again, understand the cons of it is that not all lenders offer it. It does require that firm and binding sale of your existing property, and there is a cost to it. So again, it isn't for everybody.
Yeah.
even if it's an option for some.
Yeah, I think that's a good point, and I think that that other realtor that you were speaking to had it correct as well. Like in our world, when we're having those discussions with the other realtor, when we're even discussing our closing dates, that's normally
Yeah.
how we sort it out. We say, okay, we've got a purchase that's coming on this date, so we want closing to happen. I always try to have it not the day before, but 2 days before so that we know the money's in the bank and then it just transitions smoothly, right? So more often than not, we're setting up the dates so where bridge financing wouldn't even come into thought,
Yeah.
right?
I just had a client yesterday, Allister. They basically they had a firm and binding sale. They had a firm and binding purchase. The sale is happening after the purchase. So this is a bridge financing all the
Right?
way. But guess what? The lender didn't offer it.
Oh no.
So now he's in a scrambling position.
Yep.
This was supposed to complete on the 18th. Now it's the 21st.
Today.
And again, fortunately, the seller is working with the buyers, but
That's nice.
there's also another huge cost, an administrative cost in making this longer from the agreed completion date on the
Yeah.
purchase. So there's more incurred expenses. I think those incurred expenses are going to come up almost to $10,000,
Yeah.
right? But again, this is one of those scenarios where you like, hey, yeah, this will be a bridge. But this actually now falls onto the broker, is that you're working with a lender where you've arranged the financing for the purchase, but you didn't understand that they don't do a bridge. And now you're
Yeah.
scrambling. And now the only type of lending that this person can do to cover that gap is very, very, very expensive. So again, working with the right lending partners, folks,
Yeah.
is as equally important to understand that even when your bridge lines up, um, making sure that where you're doing your purchase, that they actually have a bridge financing option. And in this
Yeah.
particular case, they did not.
That's crazy, man. That is amazing food for thought. See, this is again why people need to listen to this pod because it will keep you out of those problems. Because if like one of the reasons why the seller, I'm guaranteeing, is working so well with that gentleman is because of the market, right? Now, if it was a different type of market, that I will tell you would cost that buyer some money. There would be some money being given back to that seller, or the deal's collapsing and he's going to sell it to somebody else.
Well, and this one, and again, to your point, it's the market, but
Yep.
it's also a foreclosure,
Oh,
right?
okay.
So
Yeah.
so the seller, which is the
Bank.
financial institution,
Yeah.
they want to get it off their books as well.
Books
So
now.
they're a little bit more willing to work with
Right.
the buyer in this case. But to
Yeah.
your point, if that was just a regular buyer, what happens if that buyer now was in the process of purchasing something on his end,
Yep.
right?
Yep.
So again, at the end of the day, folks, just make sure that you understand what bridge financing is. Understand that all lenders don't do it. Understand that maybe a porting option is the option that you're actually really requiring, not a bridge. And again, understand your personalities of your mortgage because it's important. It's more than just the rate.
That's exactly it. Know your product and ask the questions, right? Man, that's a lot today. That's a lot in a short pack of time. Because what did we do? We got bridge financing. We got porting your mortgage. We got taking your realtor out to make sure you're taking a realtor out when you're looking at a pre-sale. And we got Castlegar being a European stop in Canada. That's a lot of amazing stuff today.
And taking your realtor for
For
deficiencies.
deficiencies and having a home inspection done as well when you're taking before you take possession of your new property.
And asking more than, hey, well, what is my rate?
What is my rate? Yeah. Wanting to know, making sure that my mortgage can do everything that I need it to do when I need it. Right?
Yeah.
That's good stuff, man. That's amazing. That's episode 68 for you folks, chock full of information and fun. Thank you all for listening with us today. Continue, please, guys, to love, like us, share us, and always, always, always leave us your comments. We want to make sure that we are doing what we said from the outset at the beginning of January, and that is doubling down on making sure you guys get the most valuable content this year. Man, I hope you guys all have an amazing weekend, boy. Again, it is going to be hot. So make sure you stay hydrated. Make sure you have some fun. I myself am taking clients of mine out to see a pre-sale. That was the impetus for this discussion today. Make sure you guys, though, are having fun. Stay hydrated. But most importantly, stay empowered. Stay informed. And Jeff?
Stay tuned.
That's right, baby. Stay tuned. Peace out.